suppose to your earlier question of if a currency is a reflection of the trade and the interest in the country, then why is the Japanese yen still sinking, and how long is that going to last?
I'll let Ashish kick off, and then I'm happy to come
Ashish.
So I think the yen does seem to be trading a little weaker than what the last move in rate differentials was suggesting. Our strategists onshore have kind of pointed out to an increase or structural increase in the digital deficit over there. I think it's quite clear that for now markets are still trading risks of the Fed staying high for long, US rates staying high, whereas in Japan, the BOJ is likely to move really slowly, and that's probably what's really driving this move in the currency.
What we're seeing on a short-term basis from a financial markets perspective is a very clear move from investors largely buying futures up until early April to moving to cash purchases of Japanese equities during the month of April, and that's continued on a quite strong basis. So we do see significant incremental demand for Japanese financial instruments, particularly equities, moving forward, which should be indicative of a stronger yen.
Ashish, a final word with you. Where do you think the best trades are at the moment?
So amongst the Asian FX complex, in the short run, we think you're likely to see the INR start to top out, in the sense RBI has turned from buying dollars to selling dollars. It's back at levels which the RBI managed to defend late last year, and in trade-weighted or real effective exchange rate terms, it does screen as cheap. There are a lot of factors that indicate that the external sector is improving over there. We still think there's some residual strength in the Sing near for a while, and we like the Thai baht from a medium-term point of view. At the other extreme, I would put the peso, though it's moved quite a bit. We still like the Taiwan dollar as a funder.